We were discussing about this Roshan company case study, and then halfway through we had to leave that because it was time that day. It's a small question. This one person, Mary Hobbs, joins Roshan company. She has worked as an accountant for very long time in Roshan company. Later on, she was taken as a finance director in the same company. Then when she joined the company, she observed that the board of directors, all of them are quite senior to her. They are there for many years, and the executive chairman is Timothy Roche. Um, See, after his retirement, they're thinking about bringing his son into that chairman position. Okay. Um, they were not recruiting anyone external. See, there are two types of directors: executive directors and non-executive directors. The non-executive directors are also once upon a time they were employees of Roshan company. Later on, they were taken. Technically there is no I mean, they do not have the attitude of recruiting anyone from outside. Even after a death of one non-executive director also, the post was still vacant. They do not have an intention to recruit anyone into that place. So I think the number of non-executive directors now, as of now, is only 2 in the company. That's the scenario, that's the background. See, then she saw that they sit alongside an executive board of 7 that, apart from Mary, have all been in the post for 10 years. That is what we observe. Then Mary highlighted this aspect. Mary noted that board meetings very rarely contain any significant discussion. Anything which was decided, a decision that is taken, they did not bring it for discussion or debate. They were kind of agreeing to the decisions that were taken in the meeting. So, as such, there is nothing about discussing. It was all they would confirm to anything whatever was proposed. So that was the attitude what was seen there. Um, she was told and had worked for the company for so long that they all knew that was best for the company in any given situation. And she also observed one more important thing. Mary observed that notes and strategy were not presented at the board meetings, and she asked Timothy Roche whether the existing board was fully equipped to formulate strategy. Are they qualified enough, or I mean, do they have those abilities to formulate strategy? The important thing, what one more thing she observed was, um, they didn't come from diversified fields. Somewhere we saw that. Then Mary observed that notes on strategy were not presented at board meetings, and she asked Timothy Roche, who's the executive chairman, whether the existing board was fully equipped to formulate strategy in the changing world of retailing, and whether a nominations committee would help address weaknesses. She did not receive a reply. We read through the entire question and scenario given. Then Timothy Roche has subsequently approached you, an external consultant, to see if there are any weaknesses in the current governance structures of Roche and Company. He also wanted your views on the role and usefulness of a nominations committee. So keep this content in mind. We'll quickly go to the PPT and try to understand what is the role of nominations committee. We'll get back to this particular case study as soon as we understand about nominations committee. The font is so less. Okay. Non-executive directors, I have explained to you the other day. Non-executive directors, advantages of having them on the board was because they do not receive the remuneration from the company. It's only the directors' fees what they receive for the work they carry on, but they are not regular employees of the company. Therefore, their decisions are unbiased. They have an independent view. Okay, they monitor with an independent view, independent review. They um, come from diversified areas, so they carry with them their expertise, perception, communication, and discipline. See, the reasons for independence of NEDs also I did discuss the other day. To provide a detached and objective view of the board decisions, to provide expertise and communicate effectively, to provide shareholders with an independent voice on the board, to provide confidence in corporate governance, to reduce accusations of self-interest in the behavior of executives. So these are the reasons. But then I mean, they have to have an independent view and review of the company, so that the chances of conforming with whatever decisions the senior management take, that can be minimized. See, they need not conform with that. They need not accept. They did not agree with whatever the senior management decides. They have to have that skepticism attitude, which is questioning: is it appropriate? Is it right? So look into that. But there is a threat to independence of NEDC in all of the NEDs in the following situations. If they have a material business relationship, maybe they in some form they receive some benefit, some business transactions with the business. Therefore, that biased attitude, favorable attitude towards the management would always be there. Or they should not be employees in the past 5 years. That's another thing. Then they should not have cross directorship in another company. They should not be receiving remuneration from the company besides um, directors fees. Should not have close ties with family ties with directors. um, Significant, they should not be significant shareholders. They should they should not, if they serve on board for more than 9 years, there is a threat. Okay, so in this case we see most of the points are uh, present there in Roshan company. See, the directors, executive directors were once upon a time the employees of Roshan company. Okay, they are employees. They were employees in the last few years. They are there for the last 10 years. So serve on the board for last 10 years. Okay, some of the points here we see that there is a threat to independence of NEDs. Okay, um, who should be a chairman and CEO? A chairman and CEO, clear division of responsibilities must exist at the head of the company. The point here is, see, these are two important roles at the strategic level. If both of them are taken up by one individual, then decisions would not be appropriate. If there are two people, at least two different opinions, two different perspectives can be brought into the decision making. But if it is both the roles are taken up by one person, every possible chance would be there in terms of a fraud happening. We will be studying in the coming days the concept of internal control. See, under internal control, there is one component called as control activities. One of the control activities is the duty should be segregated and allotted. So, if we see that there are two different roles, one role of a chairman, one role of a CEO, then both of them should not be taken up by one individual. A clear division of responsibilities must exist at the head of the company. If it is not so, then absolutely things will be um, biased. Only one perception would be there. um, the person who has both the roles will have the um, power, unfettered power of decision. So who would be there to question them? So that becomes a risk to the business. Splitting role of chairman and CEO, you should always remember. See, when you will be joining corporates or any organization, see, roles at the senior level especially should not be assigned to one individual. Okay, the same person is taking care of everything. Uh, is absolutely um, not to be done, not to be taken up. What are the reasons for splitting role of chairman and CEO? Reasons for splitting is representation, accountability, and temptation. So each role has its own set of responsibilities. They do represent a particular activity decision, and if the most important thing about not joining or not assigning the multiple roles to one individual and splitting them and distributing among them is to see that there is no kind of a fraud happens, there is no temptation to do something wrong. If there are two people, at least one will raise I mean the allegation against the other if something is wrong. But if there is no one to raise anything, there is every possibility to be involved in fraud. So that should not be the case, that should not happen. Okay. um See, reasons against splitting is, I mean, generally, people come out with all logics and reasons stating that one individual is capable enough of doing multiple tasks, and then of late, everybody talks about multiple tasking and doing multiple, fulfilling multiple roles at the same time, etc. So, but human abilities are different. We should understand that one individual cannot take up the role of multiple people, and then multiple tasks cannot be taken up by that. So that part of it has to be remembered. So what's the responsibility of chairman, what is the responsibility of CEO? Responsibility of chairman: ensure that the board sets and implements the company's directions and strategy effectively. Okay. Then act as the company's lead representative, explaining aims and policies to the shareholders. So that's the role of the chairman. What is the role of the, or what is the responsibility of the CEO? Now, CEO's responsibility is for the performance of the company as determined by the board strategy. How do they implement and achieve the targets that are set, the plans that are prepared? How does the implementation happen? Then the CEO reports to the chairman and the board of directors. See, the performance part of it, the implementation of the strategy part of it is taken care or looked into by the CEO. CEO now then reports to the chairman and to the board of directors. The chairman is responsible to implement the company's direction and strategies effectively. Okay. See, these are decided and implemented. So at the time of implementation, how is the implementation going on is looked into by the CEO. CEO ultimately reports to the chairman and the board of directors. Who got disconnected? Who's Nitin Varghese Matthew?
Recording in progress.
Who's recording the class? You are recording the class, Nitin. Okay. Okay. Then the next one is what is induction and CPD. What is CPD? CPD talks about continuing professional development. The board of directors, what are the induction requirements? What does it mean by induction? Anyone? Any one of you, can you tell me what is the meaning of induction? I'm not supposed to ask you questions. Even if I ask, you would not respond. Any one of you, what's the meaning of induction? Put an answer in the chat box. Any one of you knows what is the meaning of induction? Anyone listening to the class? In any paper, did you learn about familiarizing new employees? Yes, somebody has answered. Good. Familiarizing new employees with companies. So some kind of initial training wherein they are made yes, familiar with the company's policies, procedures, the to make them be aware of what's the culture of the organization, etc. So first aspect of it is introducing the employees to the organization and the culture in the organization. They are told about what is their role, responsibility, etc. So um, induction is given to the employees. Did you ever study about the business ethics? Any paper? There is a principle of business ethics which says, because there are many things about objectivity, confidentiality, integrity. There is one thing called as competence and due care, professional due care, competence and professional due care. What does it say? The people who join the organization, they have to ensure that they possess the skills that are required, to carry on with their duties. See, it is their responsibility. So if at all, if they do not have those skills, they have to update themselves, acquire those skills, and carry on with the work. So that is a requirement. In this changing times, see what skills are applicable today may not be applicable tomorrow. So there is a need for the employees, the people, the staff, the management in the organization to enhance their skill. So it is not only that when they join the organization, whatever skills they possess, they continue with that, but it is also important that they acquire new skills. For that, there is a requirement. See, all professional bodies also have this requirement to maintain their license, to have the continued members and then have the membership maintained by them, they have to acquire certain credits, okay, in the form of continuing professional development. So tomorrow with this qualification you will also be expected to put in certain credits each period, okay, so that you can get the benefits of being the member of that particular professional body. So continuing professional development, expand and update knowledge. Formal CPD programs should be conducted in the organization for the benefit, for the skill development of the employees in the organization. So it may sounds very fascinating to listen to someone saying that I joined in the organization in this capacity, in this role, and I'm retiring from that. So it may sound nice, but that is absolutely not the thing which should take place. See, when people join in one capacity, it is it should not be the case where they continue in that same capacity for a very long period. Tomorrow when you join also, you should not think that I this is my dream company, this is my dream role, therefore that's it, I don't want to do anything else. In terms of qualifications also, you should never say that I've studied enough, let me now take a break and then stop or discontinue or something like that. See, it is important that the skills have to be enhanced with the changing times. Everything is done in a different manner these days. There's a lot of innovation which is brought into the work in the organization. To be on par with what is happening in the market, one has to enhance their skill. So now it is the responsibility in the organization also to ensure that employees skills are enhanced. Therefore, from time to time, whatever are the sessions that are to be conducted for the benefit of the employees also should be taken care by the board of directors. It is their responsibility to conduct the training sessions, to ensure that there is proper attendance during those training sessions, the skills are enhanced so that they are involved in um, productive work, they come out with innovation in their work style, etc. So all that also has to be taken up. Then diversity on the board. So diversity describes the range of visible and non-visible differences that exist between people. So here in Roshan company, what was the scenario? All of them, almost all of them were from similar background, so there was no diversity there. See, people from diversified fields bring in their expertise, the situation would be different. They contribute multiple aspects, multiple um, levels of knowledge, and then expertise will be pooled up together for the benefit of the organization to take better decisions. Okay, diversity describes a range of visible, non-visible differences that exist between people. Recommendations are to increase diversity from 2012, which include new disclosures and measurable objectives. So, it is important to have diversified people on the board, which Roshan company did not have. Okay. Now, performance evaluation, board as a whole, directors individually, board committees. So, we will now be looking into what are the different board committees. The board of directors uh, appoint different committees. First, we'll see nominations committee, go back to the case study, complete that, come back and then complete with the other committees. So, the board of directors appoint nominations committee, remuneration committee, risk committee, audit committee, four different committees. The first one, nominate. First, let's see what is the importance of these committees. It reduces board workload because each committee will be looking into a specific area, and decisions will be taken related to those areas. So that is one important thing, that because the board of directors have, the board has certain responsibilities, they have multiple roles to play, they have responsibilities to take up, and every decision that is taken, their approval is required. So when the work is there is great responsibility with the board of directors. It's always better that there is some amount of divisionalization or allocation of work to different committees. So on that note, committees are formed. So it reduces the board workload and enables them to improve focus on other issues. Creates structures that can use inherent expertise to improve decisions in key areas. So somebody who's capable of taking decisions, I think if charge is given to them, if they are made as the responsible person of a particular committee, better decisions by that person is possible to be taken up. Communicates to shareholders that directors take these issues seriously. Increase in shareholders confidence. Communicates to stakeholders the importance of remuneration and risk, and satisfy requirements. The UK Corporate Governance Code 2010. Now that talks about the principle based approach. So as part of that, this is also one requirement that the committees are formed. Okay. The first one is nominations committee. What is the role of nominations committee? It provides a formal, rigorous, and transparent procedure for the appointments of new directors to the board. The They are involved in providing formal, rigorous, and transparent procedure for the appointment of new directors to the board. The responsibilities of nominations committee: review regularly the structure, size, and composition of the board and make recommendations to the board. So, who all are constituting the board of directors? So, they have to look into that. They have to decide on what would be the structures, the size, composition of the board, and make recommendations to the board to recruit someone else, to appoint someone else, maybe replace them or change them in on rotation basis. Such kind of recommendations would be given by the nominations committee. They consider the balance between, there should be a balance between the executive and the non-executive directors on the board of directors. Ensure appropriate management of diversity to board composition. These directors should be from diversified fields. Provide an appropriate balance of power to reduce domination in executive selection by the CEO or chairman. Reduce the domination in executive selection by CEO or chairman. They cannot decide about who would be the directors who would be selected for different roles. Okay, continued with that, we see that evaluate the balance of skills, knowledge, and experience of the board. Full consideration to succession planning for directors, whether they should be continued or not. Full consideration to succession planning for directors. Prepare a description of the role and capabilities required for any particular board appointment, including that of the chairman. Identify and nominate for the approval by the board candidates to fill board vacancies. Recommendations to the board concerning the standing for reappointment of directors. Be seen to operate independently for the benefit of shareholders. So ultimately, they look at the overall benefit of the shareholders. So a nominations committee will be basically looking into who would be constituting in the board of directors. So what is how many number of executive, non-executive directors should be there? Should there be should the executive directors be continued after their term? Is there any kind of a domination by the CEO or chairman on these executives to minimize on that, to reduce that, to ensure that the people from who are appointed are from diversified fields, etc. Basically, they would be looking into the nominations of the executive directors as well as the non-executive directors. So a proportion of these two categories should be there. That is what is looked into by the nominations committee. Okay. If at all, if there is a vacancy that arises, that has to be appropriately filled. Then look at the reappointment of directors, and ultimately the overall benefit of the shareholders is what has to be looked into. Okay, we are on. We are discussing the content of Roche and Company. So now Mary felt that. So Mary write a report to Timothy Roche. So Mary wants to write a report to Timothy Roche because Timothy Roche has subsequently approached you, an external consultant. No, you are to write a report. You are in the capacity of an external consultant to see if there are any weaknesses in the current governance structures of Roche and Company. He also wanted your view on the role and usefulness of a should there be a nomination committee basically. So he's asking you, you are an external consultant. You would not have to take the uh, take any biased opinion, biased decision, or you need not favor anyone in the organization because basically you are an external consultant. Unbiased, impartial view can be given. Then what is the scenario? According to that, whatever, if there are any kind of loopholes or inappropriate scenario, that has to be exhibited there in a manner which wherein you are communicating the problem effectively. Of course, you have to also mind your the tone which you use or the language which you use should be in a professional way. Professional behavior is what is expected. Okay. Um, so now you have to write so all reports. So if the question says that it is a report style of writing the answer, so if at all if a report has to be written, the reports start in the format of you will address that you will address it to whom are you writing? Timothy Roche. Who's Timothy Roche? Timothy Roche is the executive chairman. So you will address the person's name, then chairman, executive chairman, Roshan Company. So address it to the person, and who's writing? You are writing. Who are you? Your role is an external consultant. So immediately write from whom is this report being sent to Timothy Roche. You see, individually you will not be taking your name. Therefore, you just have to mention your designation. The designation now here is you are an external consultant. Done. Talk about external consultant, and every report that you write should have a subject. See, what's the subject? Subject is criticism against the governance at Roshan Company and usefulness of nominations committee. So some tagline in your own words which represents the scenario there in that particular case study. The question is very clearly asked about, you are asked to criticize about the governance arrangements, if at all, if there is anything to be criticized. So criticism against the governance at Roshan Company and the usefulness of nomination committee. There is no nomination committee in Roshan Company. Done. So write a subject line. You're an external consultant here. Put a subject. Okay, write the subject and then start building your answer. Anyone has any point to add? Criticism against the governance. I will scroll the content once again. We are discussing about the criticism at Roshan Company. You can either speak on the mic or you can put your point in the chat box. Either ways, it will be welcome. So please do participate. We will, when multiple people respond to the case study, we get to understand different perspectives here. So that is very, very, very useful. Maybe what we can out otherwise look at, by following others, their opinion, things would be much clearer for us. I want each one of you to contribute a small case study. So nothing much would be there. I'm really sorry, it is jumping. Okay, please participate in the discussion. 10 students are there, 10 of the you responding also will make a decent amount of answer. What has to be criticized here? What are the points? Any one of you? 100 odd students are there, 100 around today, though, around 100 students are there. Is governance good? It is mostly family domination is there in the um, senior board positions. They're not considering recruiting anyone from outside. They just want to pass on these crucial positions in the organization to their children or the family members. No thought about Rahul, you contribute 1 point. I will add Richard into the classroom. Let's see. When you are not responding, not learning anything, what's the point in getting attendance also? And most of the executive and non-executive directors were once upon a time employees of Roshan company. Okay. Therefore, they um, do not give their independent review about the affairs of the organization. So that is again another criticism. They all come from similar background. That's another criticism. So as many points as you talk about, see you will. How many marks are allotted to this particular question? This is 18 marks. So let's say 9 marks will be allotted for criticism. 9 marks, the usefulness of a nominations committee, maybe another 9 marks. So 18 marks. You start presenting your opinion in point wise. See, point wise, in the sense that each area which you have identified as a criticism, write a mini paragraph kind of thing. Don't have to be too lengthy, too elaborate. Just convey the point, explain what it actually means. So why would you consider that to be a criticism? What is it that is worth criticizing? Is has to be clearly communicated. So that's the skill which you are exhibiting, communication skill. 2 3 times I did mention about all the points of criticism. Last class also I did explain to you. Okay, then people are from similar background. They have worked for so long that they all knew what was best for the company. So nobody was questioning the others. There's no skepticism. They are just confirming with what was going on in the company. Whatever decision was taken was accepted by everyone else in the company. Okay. See, the notes on strategy was not given. So you will comfortably get 9 points of criticism. Each point which you highlight and identify and write there, present there, you can score 1 point on each point which you present there. Now comes, she realized that she asked Timothy Roche whether the existing board was fully equipped to formulate strategy in the changing world of retailing and whether a nomination committee would help address weaknesses. See, I want any one of you to talk about, is it required? You think a nominations committee would be required to be present or appointed here in Roshan Company? Yes, no, at least that you write. Anyone? Yes, at least. No, at least. I would not know who's written that. Of course, your name is there, but I will not take any decision in favor, against, or anything about that. No. So it's just that you just have to um, answer the question. Is it required to have a nomination committee at Roshan Company? Okay, I got the point. I understand it very clearly that you don't want me to discuss the case studies. So let me wind it up here, and then I will not touch upon any case study. I will only focus on delivering the content, and that should be the case. Huh. Why is specifically there is an answer? Somebody has answered that yes, there is a need because nomination committee looks into the see, it is required even in Roshan Company. Everywhere it is required because they are the ones who um contribute their opinion about what is who should be appointed, the board, the composition. Um, Second. So here also we there is a need because um, the executive directors and non-executive directors basically all of are from the Russian company. They were previous employees. They are there for very long period of time. So that part of it will be looked into. Then nomination committee will suggest what should be the tenure of each of the directors or non-executive directors. So such kind of suggestions will be given. From which areas should they be taken, because all of them are from the same group or similar. They are all they one important point which is highlighted here is they all came from similar backgrounds. So what are the different backgrounds from which people should be appointed? Suggestions will be given by the nomination committee that will be looked into. If someone is replaced or the tenure is over. So such kind of suggestions will be given. Okay, and therefore it is important, that is needed, that there should be a nomination committee. It is required here in Roshan company as well. So if we explain these points clearly, another 9 points will be added. One skill which is highlighted, for which 3 marks are given. Of course, you will be communicating the points to the chairman is has asked you. So the skill that is exhibited is communication skill. You will be communicating. Okay, you will be persuading, convincing him in such a manner that based on your decisions he will consider having a nomination of course it has come, the proposal has come from Mary has highlighted that it is there is no nomination committee in the organization, therefore there should be a nomination committee. That's all there. But now as an external consultant you will have to persuade the chairman to do consider appoint having a nomination committee appointed there. Fine. Then professional skills and marks will be awarded for demonstrating skepticism. Skepticism is that attitude which basically questions it whether it is appropriate or not. Okay, so what is going on in the organization is not appropriate. Um, in the sense, the situation of familiarity is there so much in the organization. So is that helpful in the organization? No. Such kind of issues you will be probe into that. Why is that um, on the event, in the event of death of a non-executive, why is that others were not appointed into that particular role? Certain areas where the reasons will have to be raised, I mean the questions have to be raised for the reasons why they have not taken up any other action, that has to be exhibited. So you need to have that attitude with which the skill of questioning that should be there as you run through the content of presenting your answer. You should also have this skill of skepticism, where you say that why is that the executive directors are the past employees, because it's very clearly said that the independence of the NEDs especially will be lost if they are in any capacity associated with the organization as being members of the employees of the organization, or there's some financial transaction, etc. So all that you will have to highlight there. Okay, very good, very good. One student, Ravi's. Okay, good. We'll go back to the PPT. See, the reason why I inserted one, I brought from the examination kit one question and included into that is maybe simultaneously looking into the content and the concept, because as of now, the content that is going on a very dry note. Therefore, I thought a situational understanding about what is appropriate um, would be better. So that's the reason why I have included one case study. I hope you understood how to do that. So what are the committees which the board of directors appoint? First one is nominations committee, who look into the appointment of directors, executives and non-executive directors. Second one is about a remuneration committee. So what is the responsibility of remuneration committee? So the name itself says what is remuneration committee. The role to have an appropriate reward policy. So it is connected to remuneration, it's self-explanation, explaining. So they are involved with matters of remuneration, reward, any kind of incentive, all of them. Okay, so the role of the remuneration committee is to have an appropriate reward policy that attracts, retains, and motivates directors to achieve the long-term interests of shareholders. Okay. What are the objectives of the committee? The objectives of the committee The committee is and is seen to be independent. This committee also is supposed to be independent with access to its own external advice or consultants. Has a clear policy on remuneration that is well understood and has the support of shareholders. There should be clarity in that. Performance packages produced are aligned with long-term shareholder interests and have challenging targets. Reporting is clear, concise view of policy payments and the rationale behind them. Why are we actually looking into so much about the remuneration committee? The directors receive their remuneration from the company based on the performance. So if the performance is up to the standard, up to the mark, if they have achieved the targets that are set for them, they are entitled to receiving some remuneration, bonus, commission, incentive, award, reward, all those things would be there. The remuneration committee will be looking into the appropriate reward policy also. The role to have an appropriate reward policy is to see when there is a reward, people usually feel motivated to perform better. So, what should be the amount of reward will be looked into. Okay, to become eligible to receive a reward, they have to prove their performance. Okay. The performance in terms of the targets and tasks. So the remuneration or the rewards are usually connected to the performance or the rewards. So when are they entitled to receive a reward has to be clearly mentioned. There should be clarity in terms of rewards. See, something like that, if the company is profitable, then they will receive a reward of. See, profitability would be anything. What is profitability? Is there a standard profit margin which they have decided? So that clarity should be there. When are they going to receive? See, an amount of 5% profit margin is also profitability, 15% is also profitability. So rather have it a clear cut uh, standard that is set, a target that is set. On achieving that target, they would be entitled to receive a reward. So a clarity should be there on the remuneration policy. Okay, they have to be, it is not just that current period, but it should be considering a long period of time. See, if it is only focusing on the current period, some amount of manipulation is definitely possible, uh, that can take place. See, if it is the profitability in the current period, some accounting frauds can happen, some manipulation can happen in terms of deferring the expenses to the future periods, or bringing into picture unearned revenues. The future revenues which they are going to receive can be shown as the current period's revenues. See, if there is some agreement upon taking up the transactions in the future period, that can be shown in the books of accounts as current revenue. Some manipulation may become possible so that the current period's profitability position is depicted as very attractive so that they can receive remuneration. But if it is connected to long period, if they show certain transactions in the current period, defer them to the next period. If the current period profitability is good, the next period's profitability will not be good. So that they understand if it is connected to long period. So uh, in a balanced manner, in an appropriate manner, the accounting transactions will be recorded in the books of accounts. So they would not inflate the profitability to become eligible to receive the rewards. And the reporting should be clear, clear, concise view of policy payments and the rationale behind them. The responsibilities, see, as we have discussed that, see, we see the responsibilities. Determine and regularly review the framework The policies broad policy and specific terms for remuneration, um, terms and conditions of employment and chair of the chairman, board, and executive directors, including design of targets and any bonus scheme payments. Recommend and monitor the level and structure of the remuneration of senior managers. Establish pension provision policy for all board members. Okay, so they have to look into these areas. The overall remuneration framework will be looked into. They have to be involved in designing of the targets, and on achieving the targets, what is the bonus payment which is entitled to be received, what's the remuneration of the senior managers, and also you have to look into pension provision policy for all board members. So that set a detailed remuneration for all executive directors and the chairman, ensure that directors and key management are fairly rewarded. The remuneration of executive directors and key management is set by individuals with no personal interest. Agree any compensation for loss of office of any executive director. Agree any compensation for loss of office of any executive director. I do not know what would be the available time, but nevertheless, I just want to try out a case study related to remuneration. That one is also a very small one only. Um, it is about the one second. I'll put that on the screen. Okay, not able to find it. After a while, I will maybe in the second half when we after the break when we join, we can look into that. I will also want to do uh, another case study. Fine. Chapter 12. Chapter 12 is reporting to stakeholders. So stakeholders who are institutional investors, shareholder activism, then general meetings, and then proxy voting. What has to be disclosed, voluntary, mandatory, what are the best practices? So institutional investors, different types, importance, and potential problems that arise. So what are the potential problems with the institutional investors? They are a stakeholder, so they are investing their amount with an expectation of earning a return. The problems arising, I'll just highlight this one. Problems arising from institutional shareholder dominance. It is short termism of fund managers, lack of skills of trustees, lack of influence of individual shareholders. Okay. So, what are the potential problems? Here we are looking at potential problems from the institutional investors. They may focus on the short term for the returns to be paid off, short termism of fund managers. So looking only at earning a profit in the short run and paying that. That can, instead of waiting for a longer period of time for their benefits to be maximized, if the focus is only on the short term, that's one problem. Who are trustees? Trustees are the mediators between the company and the institutional investors. So if there is a lack of skills of trustees, that also can create a problem. If there is any default on behalf of the company, then the trustee is the third party which will interfere in that matter to settle things. So lack of skills of trustees also can create a problem there. um, Things will not be addressed appropriately, if at all, if there is any kind of a breach on part of the company, that institutional investors will not be taken care of, or their problems are not addressed appropriately. Lack of influence of individual shareholders is also there are many individual shareholders, um, their lack of influence, so they may not be putting any pressure on the company, therefore the company also, please don't come with recommendations about allowing me to admit the students into the classroom. You mutually decide. 100 students cannot have one representative to become the co-host. Why are you disturbing me? As is, the content is so vast, I have to deal with that, no? See, who's recommending here? You become a, if you are so concerned for your friend, please become the co-host, no? I will not entertain any kind of such discussion here, asking, recommending me to admit somebody. This looks really very nonsense to me. Institutional shareholder intervention conditions. So, um, regarding the institutional investors, we will address this with the help of a case study little later. Okay. For the moment, what are the disclosures is what we will be looking into. Quickly, we'll just run through this, but some other time, some with some case study, we will be taking it up. Institutional shareholder intervention conditions. Um, what's the strategy, the operational performance, acquisitions, and disposable? These are the areas where these people would be intervening in that. Acquisitions and disposals. What's the remuneration policy of in the organization for various um, directors, executive directors, etc. Then the internal control system that is there to have an effective control uh, in the organization to eliminate any kind of a fraud happening. But what are the succession plannings that they take up? What is the role towards the social responsibility? Failure to comply with relevant codes. Okay. The next topic here would be about what are the general principles for disclosure. The most regular and constructive dialogue between company and shareholders. That is disclosing the things that happen in the organization. Directors understanding in the interests and concerns of shareholders. Shareholders understanding what the company is trying to achieve when there is an proper disclosure, when things are revealed. Because now the directors are in the capacity of agents, so they have to communicate to the principal the state of affairs. So from time to time they have to convey that they have to communicate that. So directors understanding interests and concerns of shareholders, shareholders understanding what the company is trying to achieve. So from shareholders' point of view, also they have to understand how things are managed, controlled, and managed by the um, board of directors in the organization. Increased shareholder interest, encouraging checks on managers of the company. Potential benefits from closer interest by major shareholders in the company affairs. So they cannot just throw everything, the responsibility on the board of directors, but sometimes they also should take care of what is going on in the organization. They should encouraging checks on managers of the company. So they also have to have an interest that they have to take up and then look into the affairs of the company. We have done US rule based approach. We are doing UK principle based approach. As part of principle based approach, then there are certain principles defined by the UK corporate governance code given as per the principle based approach. We see what is the role of the board of directors. In the board of directors, the board composition is how should the board composition be. So we have understood about um, the board composition would be as executive directors, non-executive directors if there is a unitary board, or if there is a two-tier board, there would be the management board separated from supervisory board. This is all part of the principle-based approach. Then again, um, depending on the requirement, there are different other committees that are appointed. One is the nomination committee, then remuneration, then risk committee and audit committee. Of course, we still have not done that. Okay, where are we? So UK code, what are the main points of disclosure covered? Annual general meetings, the directors, the nomination committee, remuneration committee, audit committee. So what things have to be disclosed? So there are certain things that are mandatory, certain things that are voluntary. Mandatory, anyway, we know that the financial transactions all have to be disclosed. Mandatory information which must be publicly disclosed to comply with the set of laws and rules and laws, because the disclosure of financial statements is mandatory. But then later on, it see, stakeholder is someone whose interest is with the company. So any information which is disclosed by the company will be used by the stakeholders for better decisions. So that's the point. So the disclosure and the information that is given by disclosure will help the stakeholder take better decisions. We also know that the financial statements that are disclosed do not have all the information. Complete set of information is not present, because the concept of accounting itself says that the transactions that are measurable in terms of money are recording, classifying, summarizing the transactions that are measurable in terms of money, and it is in a summarized format. So complete set of information, full details are not available in this mandatory disclosure of the financial statements is not very helpful to the stakeholders to arrive at better decisions. Therefore, there are certain other things also voluntarily taken up by the organizations to disclose various other aspects. So voluntary disclosures, voluntary information which a company may disclose should it choose to do so. So there is no such thing that they have to disclose that. But see, in a ecosystem, see, we see that in this ecosystem where uh, organizations are seen as interdependent on each other. The present environment, the world in which we see the corporates that are present, there is a sense of realization that they cannot survive in the environment all by themselves. There is, to a great extent, dependency on each other. Everybody here in the ecosystem has to depend on the others. So in that case, the realization that they have to cooperate, they have to be helpful to others, makes them think about how they can provide a help to other stakeholders. In terms of reporting also, see, to some extent, there is a mandatory disclosure, but to a great extent, providing other information, other details along with the financial statement is what is taken up, because the amount of information which they provide is helpful to the stakeholders, and the stakeholders will end up taking better decisions. So that's the concept of voluntary disclosure. So voluntary disclosure made by the company when no legal obligation to do so exists. They are not under any compulsion. They are not under any kind of a law, but yet they still do take it up as voluntary. Okay, made by the company when no legal obligations to do so exist. Then we see strong disclosure regime can help to attract capital and maintain confidence in the company. So when they are disclosing the information for the better decisions of the um, stakeholders, in that case, I mean, there is an impression that is given which says that there is transparency in the organization. Only with organizations which are transparent, then they choose to disclose everything in their organization. So that will build up that confidence in the company. If they choose to disclose many details apart from the mandatory disclosure, other details also, other details we will be looking into, what other details are to be taken up, what other details are to be taken up at the time of disclosure. Okay, so maybe made to promote the company in a positive light and act as a marketing tool. So by way of telling others about what they are doing, see, some of them as part of corporate social responsibility also, they do come forward and tell that how they are utilizing their profits of the revenue, how they are utilizing for the betterment of the society. So a portion of the price that you pay, we are utilizing that. So that, see, voluntary disclosures definitely builds the confidence in the company. It can also be seen as a marketing tool. Okay, when they communicate what they are doing, what activities are they taking up, or how effectively they are implementing cost control measures in the organization, what is important to them, how are they adding value to the consumers, etc. So what is that they are doing? They are basically communicating this to others. So it can also act as a marketing tool, helps improve public understanding of the structure, activities, corporate policies, and performance. So this additional information which they are disclosing will help other stakeholders understand them in a better manner. Shareholders and potential investors require access to regular, reliable, comparable information for decision making. The stakeholders, they are dependent on the information provided by the company for better decision. So that's where the things come into picture about the um, corporate social responsibility. Corporate social responsibility, looking at the benefit of the other beneficiaries apart from the shareholders. Okay, then weak disclosure and non-transparent practices can contribute to unethical. If they are not willing to disclose, if there is something which is hidden, which is not transparent, if it is not transparent, the possibility of an accounting fraud happen would be there. It can be a great chance that an accounting fraud is happening in the organization, because the things are not clear, things are not transparently disclosed to others. So that possibility is always there for an accounting fraud happening in the organization. Social and environmental issues. I'll just explain about footprints and sustainability. We can go on a break and then come back and then continue with the other topics. So, social and environmental issues. See, wherever the organizations, because of the nature of work that is carried on in the organization, if there is a negative impact on the environment, then in that case, um, how do they deal with those things? So there are certain rules and regulations that are to be complied with by such organization levied by the government generally lays out certain rules and regulations that have those things have to be followed. Okay, so footprints talks about the carbon emission from these organizations, which is part of the pollution. So what measures do they take in terms of cutting down on the impact of the pollution or the emitting the pollution? So what measures are they do they take about it? So it talks about the carbon footprints. Then sustainability. um, Sustainability, the concept of sustainability is there. See, every organization uses the resources that are available uh, in the nature. Some of the resources are renewable, like water is a renewable resource. Okay, um light is a renewable resource. See, um by consuming that they would not be exhausted, but we see that there are certain resources which are non-renewable, like fuel, gas, petrol. These things are non-renewable. So if there are non-renewable resources, these non-renewable resources, if they are all consumed by the present generation, in that case, um, nothing would be left, or very minimum will be left for the future generation. So, the concept of sustainability talks about what are the measures which they are taking in terms of ensuring that some of these non-renewable resources are left for the future generations. Okay, sustainability meets needs of the present without compromising the needs of the future generation. So that's very important that certain measures are to be taken up in terms of renewing the um, utilizing the non-renewable resources effectively. So they would be consuming them, some of them, but not consuming in entirely. That there would be nothing left for the future generation. Okay, then long-term maintenance of systems according to environmental, economic, and social considerations. I don't know whether you watched this one, but there's an advertisement which comes on the television. See, um, so it is in the public interest, this advertisement. See, a group of adults are called into a room provided with drawing material, the paper and the crayons are given to the group of adults into who are brought into the room. So the adults utilize these resources very effectively, and they draw images and make their drawing very colorful. So they are asked to leave the room. Into the same room, the children are brought into the room. So the children now have to do the drawing with the remaining crayons. So after they finish the work, then when the drawings of the children are displayed, see, everybody is brought again into the same room, the elders and the children. The children drawings are all with black crayons, because that's the only thing which is remaining for them, because the elders have consumed all the color crayons in the first round. So the children have no other option but to use only the black crayons. So that leaves a message that it is not that all the resources that are available in the present generation during this particular time should not be consumed by them totally, but a responsibility should be taken up in terms of carrying forward some of these things to the future generations. Example, like so some measures about instead of asking the employees to travel by their personal transport mode, come to the office, instead of that, provide a common transportation facility where all the employees together can travel by that common transport mode, and then save on the fuel, save on the petrol, gas, fuel, etc. So that is ensuring that some of these resources are passed on to the future generations. So that's the concept there. Okay, that's sustainability. So, what kind of a sustainability plans do the organization have? Also, is very important. So, it is not that they are surviving there all for themselves, that but they are exhibiting an indication, or they are exhibiting their need to be connected with others in the environment. Therefore, they are taking up their responsibility. They are taking that up that responsibility to ensure that see the resources or uh, they are not capturing whatever is present there, but also accommodating the future generations into that scenario. That's about the sustainability plan. Okay, let's go for a break for 5 minutes and then join back. I mean, don't leave the Zoom as such. I'll put the recording on hold and then we'll continue after 5 minutes. Sustainability meets the needs on of the present without compromising the needs of future generations. The long-term maintenance of systems according to environmental, economic, and social considerations. After sustainability, see, these are the concepts that are given, definitions of sustainability development, sustainability, and sustainability audit. So, sustainable development is development that meets the needs of the present without compromising the ability of future generations to meet their own needs, attempt to provide the best outcomes for the human and natural environments, both now and into the indefinite future. Audit about what sustainability plans the organization is taking up an audit is an in-depth examination of an organization's entire environmental management system and associated arrangements. What measures are they taking to ensure that they do not compromise with the needs of the future generation? So, what measures are they taking in terms of ensuring that some of them are passed on to the future generation? So, sustainability audit, have the conceptual knowledge about that. In a case study, if something is tested in these areas, you should be able to express that, identify what is appropriate, what is not appropriate with the scenario, the case study, and then see, you have to maybe take up a critical analysis. Maybe you will have to give some suggestions about what is appropriate for the organization to take up, etc. So in those lines also you should be able to give your answer. So the conceptual clarity is what is needed. You have to have that conceptual clarity. So what is sustainability audit? Organizations choose to get assurance on their sustainability information in order to challenge and confirm views expressed in the annual report as part of the narrative disclosure. Complement internal processes such as the internal audit or stakeholder engagement, which are designed to improve business sustainability and enhance the trust of external stakeholders. Then enhance the credibility of information with those who use it to make economic and other decisions. So here, um, we are studying all this as part of voluntary disclosure. See, we have started the topic with with disclosures. So under disclosures, we are discussing about that. See what would be disclosed. See, there is a mandatory disclosure which every organization has to comply with. Apart from that, when they choose to disclose certain other areas, so under that concept of voluntary disclosure, we are looking into certain issues. So social, environmental issues. Under social environmental issues, about the carbon footprints, the amount of pollution that is emitted and what measures are taken, the sustainability, how they are ensuring that the non-renewable resources are not completely consumed by them, take up an audit in terms of the sustainability. Okay, so then footprints. Here it talks about how do they express the views. So challenge and confirm views expressed in the annual report as part of the narrative disclosure. So in this, um, the annual report you must have downloaded sometimes randomly for some, for maybe some college project, you must have downloaded an annual report. See, it is a big volume of details which are included into the annual report. What are there in that? See, the details that cannot be accommodated into the financial statements are all included in the annual report. So, as part of the disclosure, what they are including into the annual reports. So, it talks about the sustainability audit is a challenge and confirm views expressed in the annual report as part of the narrative disclosure. So, they do include details about the sustainability plans and the audit in terms of how effectively are they um, putting in efforts to um, use the resources wisely, so that they also do accommodate the future generations into that. So that is all about the sustainability audit. Then footprints. See, footprints about the amount of um, the pollution impact, which is impact of the pollution which is there on the environment. So it is in terms of resource consumption, it is in terms of pollution emission, and what measurements are taken in terms of ensuring that the impact can be reduced. Social footprint is about the social capital, the human capital, and the constructed capital. So social capital is about the association which they have with other organizations which are looking into the welfare activities. The how are they associated with other organizations, like maybe when they tie up with the environmentalist groups, etc. So they choose to disclose the details about what measures are taken to minimize the impact on the environment. Then the human capital about the employees that are used in the or appointed in the organization, and then they are employed and used in the organization. Constructed capital, we have this about the infrastructure which is used in the organization. So there are different types of capital. In a short while we will be looking into what are the different types of capital. Okay, um, as part of that, again we will touch upon the social capital, the human capital. Okay, then the constructed capital. So there's a concept called as integrated reporting. At that time I will clearly explain about what are the different types of capital. The management systems that are there, so have an internal management system. We are all studying this as part of sustainability. Now what they voluntarily are disclosing about certain things that are happening. So as part of that, one aspect of it is about the footprints, then the sustainability. So what measures are taken by them about these issues? Then what are the management systems they have to look into these aspects? So we have two things. One is EMAS, EMAS. The EMAS is the eco management and audit scheme. See, eco management audit scheme. So how how would they be um, carrying on with the see, looking into that or auditing them or evaluating their efforts and then reporting them, all that will be looked into by EMAS. Then we have ISO. See, EMAS focus on disclosure of environmental systems. So everything about the way things are taken up, it is evaluated, it has to be reported, etc. Then we have ISO 14,000. ISO 14,000's focus is on compliance with internal environmental system. Wherever we talk about environmental issues, we also have to look into about the compliance part of it. The government definitely lays out certain regulations which these organizations have to follow. They have to comply with those rules and regulations. So ISO 14,000's focus is whether these organizations comply with those rules and regulations. Compliance in terms of what kind of measures have they taken to reduce the impact that is there on the environment. Okay. Social and environmental audit. See, um, as part of the environmental accounting, so we look into about the social audit and the environmental audit. What is social auditing? Enables an organization to assess and demonstrate its social, economic, and environmental benefits or and limitations. So um, the aspects about how much of the resources are they consuming. So use of those resources is one type of cost which the organization bears. Using the resources, the cost of the resources, that's one thing. See, um, explicit. Then we see that because of the emission, the carbon emission, what impact it has on the health of the people. See, that is a cost which the society bears. That's an implicit cost. So uh, now the auditing enables an organization to assess and demonstrate its social, economic, and environmental benefits, and as well as that any kind of limitations that are there. Okay, so when by taking up the benefits of industrialization is growth and development of the economy at large, but then for that there are certain costs and prices that are paid. Okay, measures the extent to which an organization achieves the shared values and objectives set out in its mission statement, provides the process for environmental auditing. Then when we look into environmental auditing, so what is environmental auditing? Aims to assess the impact of the organization on the environment. So how much impact is it leaving on the organization? So take up an audit related to that. Involves the implementation of appropriate environmental standards. So wherever anything to do with environment is there, government does, there are regulatory bodies which do levy certain things for these organizations to be followed. They have to comply with them. So compliance is one important issue with the environmental aspects. Okay, so environmental standards such as ISO 14001 and EMAS provides the raw data for environmental accounting. So what do we have as environmental auditing content? Please read the content from the study text. See, an environmental audit typically contains three elements: agreed metrics, what should be measured and how, performance measured against those metrics, reporting on the levels of compliance and variance. Wherever we talk about a plan, a standard that is set, there is always a comparison happening and then reporting on any kind of a variance happening. social and environmental reporting, except in some highly regulated situations such as water, the production of a social and environmental report is voluntary. We are still doing the concept of voluntary disclosures. See, but organizations of late are choosing to disclose all the details. um, See, environmentalist groups are interested to understand what is going on with your organization, what measures are taken. Government is interested to understand about what measures are they taking to reduce the negative impact it has on the society. So now these details, when they are included in the reports, except in some highly regulated situations, otherwise the production of a social and environmental report is completely voluntary. But why do the organizations decide or choose to disclose this? Is um, for the benefit of the beneficiaries, for the benefit of the stakeholders, they choose that. The problem and subject, what should be the typical contents of such a report, and how do we measure it? Frameworks do exist, such as the data gathering tools, the ISO 14000 collection of standards, but essentially there is no underpinning compulsion to any of it. Then we see environmental reporting. In environmental reporting, it typically contains details of environmental performance in areas such as measures of emission, consumption of water, energy, non-renewable resources, etc. See, there are, in PM you must have studied in as part of environmental accounting. There are uh, different types of costs. The conventional cost, that is cost of material, other resources. There is a reputation cost, because there is an impression on the consumers that because of this organization there is an negative impact on the society, so they may lose out on the sales, they may stop purchasing, so the lost sales is one type of cost. To prepare the reports to be provided to the environmentalist groups and others, see, voluntary disclosure, that's another type of cost which they have to uh, incur. So the different types of costs which they would be incurring, and the rules and regulations to comply with has to be taken up. So the reporting will have these details included. Social reporting is generally context specific, and typical contents will vary with industries. What do they include? See, social, whenever we call this term social, it is about the people, their association with the people. So if it is social reporting, the issues that can be included in the social reporting are: what are the human rights issues, the workplace, occupational health and safety measures that are taken up for the benefit of the people, fair pay and employees and for employees and suppliers, fair business practices that are to be that are followed, and community involvement. So these issues are included into the social reporting. The concept of integrated reporting. What is integrated reporting? See, this we are all studying as part of um, disclosure. So as part of disclosure, what are we looking into? So there are certain things that are mandatory disclosure, like financial statements have to be disclosed, that is mandatory for every business concern. But other than that, because the organization takes up a responsibility towards the stakeholders to provide better information to the stakeholders for taking decision, there are certain voluntary disclosures taken up. Okay. See, because the stakeholders are now dependent on the amount of information, which the company provides to them. So, because the financial statements fail to provide all possible details, therefore there is a concept of integrated reporting. But what does that integrated reporting mean? See, integrated reporting is providing the complete set of information, all the details to the stakeholders, um, preparing reports on multiple aspects, and integrating these reports with the report on the financial statements. So that's the concept of integrated reporting. The integrated reporting is seen by the International Integrated Reporting Council (IIRC) as the basis for a fundamental change in the way the entities are managed and report to the stakeholders. What do they report? See, why do they have to report? See, when it is not mandatory, what is the need for them to report other details? See, the primary purpose of an integrated report is to explain to the providers of financial capital how an entity creates value over time. See, other details, the details that are not present in the financial statement, in those disclosures, whatever is not there, providing other additional information. So, this additional information is prepared in the form of reports. These reports are integrated with the report on financial statement, and then thus they are disclosed. That's why the annual reports are, so big, huge, and then in detail, including every possible information which can be provided to the stakeholders. So that is exhibiting the transparency. It is exhibiting to the investors about how they are carrying on with their activities. There is transparency brought into picture. An integrated report benefits all stakeholders interested in an entity's ability to create value. So this is for the better decisions of the stakeholders in simple terms, if we look into that. But how is reporting taken up? That is again one important aspect. How is reporting taken up? The objectives are to provide, simple thing is the objectives of integrated reporting. We understand that by integrated reporting, they provide quality of information available to providers of financial capital. One thing, provide more cohesive and efficient approach of corporate reporting. So in detail reporting about many aspects of it, quality information to the stakeholders, provide in detail information in terms of how they create value to the stakeholders. They are taking up a responsibility. Here there's a term called as stewardship to enhance accountability and responsibility. By reporting all the details about the organization, they are now taking up that stewardship, accountability, bringing about accountability, responsibility, and stewardship um, for the broad base of capitals. So I will explain in a short while about what are those capitals. So exhibiting, they're basically showing their stewardship or their responsibility, their accountability in terms of carrying on with the activities of the organization. To support integrated thinking, decision making, and action that focus on the creation of value over short, medium, and long term. So that's basically the objectives of integrated reporting. See, how is integrated reporting? An integrated report should be a single report, because any other information that is prepared in the form of a report should be integrated into one report. It is integrated with the report on the financial statement, and thus the report is called as integrated report, or what we call it as the annual report. So how do they so this is some traditional definition, you can please look into that. Okay. um, so there is a report on financial performance. Financial details are um, disclosed, a report is prepared. So any other thing is prepared in the form of report, integrated with the report on the financial reporting, with the financial reporting. So first thing is, all the details that are to be disclosed are presented in the form of capitals. There are 6 different types of capitals for the purpose of disclosing the information, even if it is a voluntary disclosure. So they are all disclosed in the form of 6 different types of capital. First one is financial capital. See, here we have the financial capital. Other capitals are manufactured, intellectual, human, social, and natural. Financial capital, what we know as the cash balances, the capital amount, etc. Um, they are anyway to be disclosed. It is mandatory requirement. Okay, an important role in our economy, enabling other types of capital to be owned and traded. Um, so the financial capital, about the financial aspects of it, anyway is disclosed. So there is a report on financial capital. But the other details which are not in the form of financial capital, which are not in the form of cash balance or those short term, very short term securities, etc. So if it is not in the financial form, financial capital, then what other capitals, what are, how are the other details that are included? So other 5 types of capital are: one is manufactured capital, the intellectual capital, the human capital, the social capital, natural capital. Manufactured capital is about the assets which they possess. So for the manufacturing activity to be carried on. In simple terms, we can remember this as property, plant, and equipment. So anything in the form of fixed assets will be called as manufactured capital: property, plant, capital, plant, equipment, etc. The land, building, plant, machinery, equipment, loose tools, etc. They all are helpful in the manufacturing activity to be carried on in the organization. So they are all presented as uh, one category called as manufactured capital. Next one is about intellectual capital. So what's intellectual capital? The intellectual assets which they possess. It's broadly be defined as the collection of all informational resources of a company in terms of the trademarks, patents, copyrights, technical know-how, etc. So these are all presented in the form. So they possess these resources. Um, broadly can be defined as a collection of all informational resources of a company has at its disposal. That's intellectual capital. Human capital is about the people, so the staff that are there. This can be described as consisting of people's health, knowledge, skills, and motivation. So, who are the employees? What are the skill set? How are they motivated? Self-motivated, proactive, good decisions, decision makers. See, exhibit all of them in the form of human capital. Comes social capital. Social capital is about the association they have with other entities in the organization. So tie-ups which they have, the connections with other organizations in the society. So the institutions that help us maintain and develop human capital in partnership with others. Example, families, communities, etc. The last one is natural capital. So what's natural capital? The resources which are consumed by them, available in the environment. So they could be renewable in nature or non-renewable in nature. So these are natural capitals. How to prepare an integrated report? The framework sets out several guiding principles which underpin the preparation, informing the content of the report and how information is presented. So basically, in simple terms, if we understand that, see, all these reports, the complete set of details are now presented in the form of 6 different types of capital. So The reports that are prepared, these reports are all to be integrated into one report for the purpose of disclosing them, or providing this information to stakeholders for better decisions. So, guiding principles, strategic focus, and future oriented. It should be about connectivity of information. All the details are presented in the form of six different types of capital. So it is connectivity of information. An integrated report should show a holistic picture of the combination, interrelatedness, and dependencies between the factors that affect the organization's ability to create value over time. Stakeholder relationships. An integrated report should provide insight into the nature and quality of the organization's relationship with its key stakeholders. By disclosing information about matters that substantiatively affect the organization's ability to create value over short, medium, and long term. Integrated reporting from examination point of view is important. Okay, because um, see, of late, organizations are realizing that they have to look at the benefit of the other stakeholders, just not the shareholders in terms of profit maximization, but how they are taking up their activities for the benefit of the other beneficiaries, how they are enhancing the value provided to the customers, what kind of a relationship do they have with their other stakeholders, how they are exhibiting that they are interdependent with the other or other entities in the organization. So that is an conscious effort put in by the organization in terms of exhibiting, or in terms of disclosing that to their stakeholders. So uh, consciousness, reliability and completeness, consistency and comparability. So overall, this concept about looking at the benefit of the stakeholders, how reporting is taken up, overall, this particular section is important. It can be tested in the examination. Okay, now we will be starting with the concept of what is an internal control system. Okay, so little better, little interesting only it will be. So we will take it up about what is an internal control system, have an internal control system to ensure that accounting frauds do not happen. See what's the framework, what are the objectives, everything we will be looking into in detail. Wherever we talk about internal control, followed by that would be internal audit. So I don't know how much we will be able to take it up, but as much as possible about internal control in this remaining whatever time is there, we will try to finish it up. I also mentioned earlier that there were many accounting frauds that have um, led to a global recession at the beginning of this century, end of the last century. So things happened in such a way that people did not understand, many did not understand as to what was going on in the organization. The, in, the things were projected in a very nice manner, but one fine day things were disclosed, and they were revealed and identified, and things were revealed which led to bankruptcy of many organizations. That is what happened. Now, to See, at the time of SOX also, I did explain to you about that. So there were many responses which had come at that point of time. So there's one concept called as having an internal control system to be installed in the organization also was felt at that point of time. See, what is that internal control system? So what does the definition talk about? Okay, other things we will be looking into that. See, an internal control system is a network of systems established in an organization to provide reasonable assurance that the organization objectives will be achieved. So there is a internal management control for procedures and policies. In simple terms, see, instead of an external entity identifying what is going on in the organization, see, when audit takes place, at that point of time, instead of they identifying what is happening in the organization, um, if they can have a control system um, in oh, Nandita.
ಹಲೋ ಆಮ ಬಂದೈತೆ ಬಂದೈತೆ
Instead of an external auditor identifying that there is something inappropriate going on in the organization, if there is a system which is installed in the organization called as internal control system, that will look into about anything inappropriate going on in the organization, it will be identified, it can be rectified. So the internal control system, so there is a framework also given. I will talk about the framework also a little later. So this internal control system will look into, if at all, if there is any accounting fraud that is happening. So there are various ways in which it can be looked into. Now, if there is an accounting fraud going on, then the organization will ultimately become a failure. It cannot carry on with the activities, and then what follows is bankruptcy. So now the organization, if it is established, it has to um, achieve its purpose. The purpose um, has to be achieved, the mission has to be achieved. So now, by having an internal control system within the organization, the operations will be carried on effectively, everything would be in place. Ultimately, they will be able to achieve their or objectives, their organizational goals and objectives can be achieved. So that is the reason, that's the purpose of having an internal control system within the organization. Objectives are, look at these objectives. What are the objectives? There are certain areas which is mentioned here. These areas, so the internal control system will be looking into these areas. The first part of it, it talks about that the activities in the organization are carried out in an effective and efficient manner. Orderly and efficient conduct, including adherence to internal policies. So the operations within the organizations are carried out smoothly. There is no issue with that. Effectively, they are carried out. See what is their intention to carry out these operations are achieved. So looking into the proper functioning, the proper implementation of things, or the operations of the organizations are effectively carried out. That's the first area. See, a system, a framework. What we will also talk about, what is the framework, what are the components of the framework. But here, as of now, what is the reason, what is the objective of having an internal control system installed or adopted in an organization is to see that the day-to-day activities are carried out smoothly. Okay, orderly, efficient conduct of their activities, also to adhere to the internal policy. So internal policies, every organization will have a set of students are all joining now last 1 hour so that they can get attendance. That's the purpose, I think. Very nice. Okay. So, adhering with the internal policies, complying with them, then following those things, whatever is decided for the people in the organization. Another important area is to ensure that the assets are safeguarded. One area is, um, see, the assets, if they are not taken care of it will be a loss. So, all possible measures should be taken in terms of safeguarding the assets. The safeguarding of the assets in terms of providing the proper working conditions, environment in the factory premises, so wherever the assets are placed. So, ensure that the assets are safeguarded properly. That's another area. Third one, the internal control system that is adopted will be able to prevent any fraud happening, prevent, or as things are implemented, also to detect if at all if there is something inappropriate going on in the organization. So measures would be taken up, or the internal control system would ensure that there is no fraud happening, prevention, and also while the operations are carried on, detection of any kind of a fraudulent behavior. That's another area. The financial reporting also will be appropriate. There is accuracy and there is completeness, full disclosure and transparency. Full disclosure, then accuracy without any misleading information, misrepresenting any kind of thing. Maybe things which are not to be accounted are accounted now, or they are delayed to be accounted. No such kind of a thing should be taken up. So it is in terms of reporting. The financial reporting will be without any kind of a misleading misinterpretations taken up. Okay, that is about the reporting part of it. That is, they maintain the records transparently, clearly, with all details fully disclosed, included into the records. Then, timely preparation of financial information. So, when it has to be prepared and disclosed, timely preparation of that. So, the stakeholders' confidence in them also will be increased. Those are the objectives, the areas where internal control system will be working in an organization. So these are the areas: the operations, safeguarding of assets, uh, protection, detection of uh, any kind of a fraud happening, transparency, accuracy and completeness of the records, and timely preparation of financial information. What is a sound control system? So sound internal control system, it is embedded within operations. So it is not that it is a separate system which is installed, but when internal control system is there, it should be embedded into the regular system. It should be a part of their organization activity. So the system, the activities that are carried on, this internal control system, whatever is designed, whatever is the framework, that should be embedded into their operations, embedded within operations and not treated as a separate exercise. Second, able to respond to changing risks. So one aspect is to identify if there is anything happening in the organization, what are the possible events that can cause risk to the organization, are to be looked into, able to respond to changing risks within and outside the company. So we call that as risk assessment. I will explain that when we learn the framework. Third aspect of it is includes procedures and procedures for reporting, controls failings or weaknesses. So if at all if something inappropriate is identified, how would they report those things? So that is about includes procedures for reporting control failings or weaknesses. Just look at this one. It's very simple to follow. What are the roles and responsibilities? So for the board of directors, they have to ensure that ensuring adequacy and effectiveness of internal control system. See, the internal control system will be identifying if something is inappropriate. It would be identifying the risk and what's the impact of the risk that would be there on the organization. So it identifies. So it prevents any kind of a fraud happening. So now the system has to be an updated one, which will be able to cater to the present requirement. So the internal control system has to be updated from time to time. It has to be validated by a signing officer and state that this system is effective enough or efficient enough to identify fraudulent behavior in the organization. So ensuring adequacy and effectiveness of having an internal control system in the organization. So any changes that are to be brought up or upgradation has to happen. That is all to be taken up. That is the responsibility of the board of directors. Okay. Next, senior executive management. Senior executive management, setting internal control policies and procedures, monitoring effectiveness of internal control system. So, as part of internal control system, we will be studying about first component called as look at the internal environment, control environment. See, in the organization, to have a control system, the control system will be defined and communicated to the employees in the form of policies and procedures. So it talks about setting internal control policies and procedures, monitoring effectiveness of internal control system. That is the role of senior executive management. Their heads of the business units are to establish specific policies and procedures about, because the purview is related to their business unit, the departments or the divisions or the business units. So the heads of the business units um, have very specific control policies and procedures, um, deciding on that, establishing on that. And for all the employees, what is their role and responsibility to ensure that operating and adhering to internal controls, following the rules and regulations laid out by the internal control system, following that. So that is about the all the employees. There is a framework given by COSO. What is COSO? Now, what are the elements of effective internal control system? It's given as there are 5 components of an internal control system. So we also call this as COSO's internal control system. So I'll just put this on the screen. POSO is a committee of sponsoring or organization. So when these frauds were were highlighted, so then such a thing not to happen again in future. See, the accounting bodies, there are 5 accounting bodies at that point of time that had come together. So these 5 accounting bodies, they have come out with some suggestions about how an internal control system should be um, installed in an organization. So if they have an if they have an internal control system, this internal control system will look into any kind of an inappropriate thing happening in the organization. It will be very quickly identified. Measures will be taken to prevent frauds happening, prevent risk happening. Then um, the internal control system will take care of no such inappropriate behavior to happen in the organization. So they have come out with a framework. So the framework has 5 components. The same thing what is there uh, in the PPT, in the slides, there are 5 components. So the framework is looking into. I will explain all components in detail. There are 3 major areas which it looks into. That is, the operations are carried out effectively, the reporting is without any kind of misleading information, accurate, complete, full disclosure, everything would be taken up in terms of reporting, and that they comply with all the rules and regulations. These are 3 major areas in which the internal control system would be looking into, that their day-to-day activities are carried out effectively, efficiently, smoothly, proper functioning in the organization. Reporting also is without any kind of a fraudulent information or um, any kind of misleading information included. Full disclosure, transparency, all that is included. Compliance, that they comply with rules and regulations. When they comply with rules and regulations, the government will have a favorable attitude towards them. They will not attract any kind of taxes and penalties, etc. Penalties, fines, etc. for not complying. Then, if they do not comply with that, any kind of a grant or subsidy which was earlier given to them, that will be withdrawn. So, those are areas which has to have to be looked into. So, therefore, a specific effort about they complying with the rules and regulations. So, the 5 components. So, when these 5 components, we will see the discussion. These 5 components are applicable across all the units and divisions of the organization, entity level, divisional level, operating units level, and then across the different functions of the organization. 5 components: control environment, risk assessment, control activities, information and communication, and a report and mental. I'm really sorry. The 5th one is about monitoring activities. So these are 5 components. Let's get back to that. So these 5 components later on, when it was revised in 2013, they are now presented in the form of course, you don't have to learn that. This is just additional information. Now they are presented in the form of 17 principles. So 5 of them are elaborated now, and we have them given as 17 principles of COSA's internal control framework. But let's learn about basically, let's learn about what are these 5 components. Okay, elements of an effective internal control system. So first thing is about the uh, the control environment has to be looked into. the control environment or the internal environment. Basically, the internal environment understand the organization, the size structure of the organization. See, in terms of the control system, what are the policies and procedures, whether they were communicated to the people in the organization, who's the management, what is the role of the management, the seriousness of the management, internal environment. See, to have a control system, it, there is a control system which has to be implemented. For that matter, any system to be implemented, it is the attitude of the top management which is important. If the top management is serious about implementing a particular thing, it can be effectively implemented. Otherwise, if they are not serious about implementing something, it cannot be implemented effectively. Okay. So the role of the top management has to be understood. The tone is always set at the top. So that is very important. Control environment. Then we um, see what are the responsibilities of roles and responsibilities of the board of directors, the different committees that are appointed. Um, so the role of internal audit function, the role of audit committee, so different committees which are there. So what is their responsibility? All roles and responsibilities that has to be studied in detail. Apart from that, the people in the organization, what are their values, so how ethically, morally they are strong. See, because to have an effective internal control system, the employees in the organization also have to cooperate. If they are involved in fraudulent behavior, it cannot be implemented. Like we have mentioned that the seriousness of it comes when the top management is serious, then it can be effectively implemented. If they are not serious, then it cannot be effectively implemented. So at the time of implementing it, what are the attributes of the people? See, what is their value system, how seriously can they implement an effective internal control system? All that will be part of the control environment, studying the control environment. Okay, internal environment or control environment. Second one is identify if there is any amount of risk assessment. Risk assessment is, see, what is risk, how do we define risk? Anyone, just to see if there is anyone on with me to get an answer. Any one of you, either you speak on the mic or write in the chat box. What is risk? Any kind of an answer also is fine with me. Anyone? So I will be assured that somebody is there listening to me. Situation of danger. Okay. Anything else? Uncertainty of an event, whether we will have profit. See, very good answers. Uncertainty, basically, because see what is anticipated, there would be planning always taken up, forecasting would be there, anticipations, expectations would be there from the future. But if there is any change in what is expected, that is, if there is any variation from what is expected, that can be referred to as risk and uncertainty. See, sometimes we would know that for sure that there would be a variation. Sometimes, um, see, what would be the variation also is not known, or to what extent the variation would be there, that also is not known. So that can be referred to as uncertainty. So risk and uncertainty basically refers to a situation where there is a variation in what is expected. Okay, that is called as risk. But why would there be variation? First question: why would there be some amount of uncertainty, or why would there be a variation happening? That is because of happening of many events happening. See, let's say, for example, if government is planning to come out with the minimum wages act, so what happens? The minimum amount of wages that have to be paid will increase. The amount of wages that are until now what they are paying, it will definitely increase. That will have an impact on the total cost, impact on the profit. That's one thing which is a possibility to happen. It is an event which can cause risk to the business. That's one thing. See, internally also, maybe the employees are planning to call out a strike. So if that is there, there would be an impact on the productivity. That is an event. The events can happen internally, events can happen externally. Multiple events. See, the happening of events, the the happening of events will cause risk to the business. So what is the amount of risk has to be quantified there. Assessment is calculation, quantification. So how do we calculate the amount of risk? How do we find out the value of risk? So the value of risk will be calculated based on what are the events, and because of the happening of these events, what is the monetary loss. Quantify, convert that into monetary value. The monetary loss that would be that would happen because of happening of events. Events could be internal, external, multiple events. Okay, then the monetary loss should be multiplied with the probability, the likeliness of happening of that event. See, is it just randomly stating that this would happen in the future? Instead of that, if something is anticipated, along with that anticipation, the likeliness of happening of that event also should be taken into account. So the consequence, the monetary loss, should be multiplied with the probability of such a thing happening. Like, for every event, such a thing should be taken up. The amount of risk has to be calculated. That is risk assessment. That is the second thing. First thing is understand the internal environment thoroughly. Second component talks about, if risk is present, what is the value of risk has to be calculated. Okay. Then the third component talks about what are the control activities that can be taken up. Control activity to ensure that there is no fraud happening properly. There has to be certain activities to be taken up to ensure that a control system can be effectively implemented in the organization. As part of that, certain things are specified as part of the control activities. So one important thing is about segregation of duties. The duties have to be segregated. What does it mean? One individual cannot be assigned with multiple roles. Okay, if multiple roles or multiple tasks are assigned to one individual, there is a possibility of accounting fraud happening. That is explained as, see, the one who has the authority to take up a transaction, that individual should not be looking into other areas. Like, if a transaction is taken up by someone with the authority he has, like the finance department or members of people in the finance department, they have the authority to finalize on a transaction. But this person should be different from the one who accounts for the transaction in the books of accounts, the one who records the transaction in the books of accounts. And these two people should be different from someone who takes care of the asset, safeguards the asset. First one is the authority to take up the transaction. The second individual is someone who records the transaction in the books of accounts. The third individual is the one who safeguards the asset. Let's say that mm, these are the three different areas. We have also the fourth one. If these three areas, if they are, if the responsibility or the tasks are assigned to one individual, even if without purchasing an asset, the person can record in the books of accounts that an asset was purchased and later on the asset was lost. So that will result in a accounting fraud happening. But individually, if individually the tasks are assigned to different individuals, the chance of a fraud happening can be minimized to a great extent. Then we see a fourth entity, fourth person will be rectifying the or reconcile. I'm really sorry. Will be reconciling this transaction, reconciling this transaction, verifying the asset with the accounting proofs, the receipts, vouchers. So verify that and then validate that these are the assets that are taken up by the organization. So one part of control activities is to segregate the duties. Segregation of duties is one kind of a control activity. After segregation of duties, then we see that there should be um, control measures taken up, or um, restricting the access to people. See, some of the areas in the organization, access is not provided to everyone. Maybe heavy machinery equipment, costly equipment, not everybody is allowed to enter into that premises. So there is a restriction there. Access is restricted. The areas where systems are placed, the computers are placed, not everybody can have an access or enter into those areas. See, people with valid proofs and identities to validate their identity, only on providing those things they are provided an access to be present there. The different kind of access controls. So even if they are present there, they cannot have an access to the systems. Even if they have an access to the system, they may not be allowed to have an access to the databases that are there. So some kind of restriction, some kind of access controls would be there. That's one kind of control activity to ensure that accounting frauds do not happen. So control measures, control activities. See, the all the see the documents that are available. Documents also should not be they should not be accessed by everyone. See, the document flow or the document should be provided to only those that would require these documents to carry on with their activities. So document flow should be there only to those people that require these documents for them to carry on with their work. The forms that are used also should be pre-numbered. So later on, any kind of a verification that has to happen, these pre-numbered forms will help them to identify the transactions. So the control activity should be taken up in the organization to ensure that frauds do not happen. Fourth component is information and communication. See, all that information which is relevant for them to have an accounting information, for them to have an effective internal control system has to be gathered. Information has to be gathered, which is useful for them to have a control system, effective control system, gathered and communicated to the people in the organization. That is information and communication. See, as things are implemented in the organization, there should be constant monitoring how the things are implemented in the organization, how activities are carried out in the organization. Monitoring has to happen, constant monitoring. These are the 5 elements of an effective internal control system. So this is a framework. This framework was given by COSO. We call it as COSO's internal control framework. This course's framework has 5 components. These 5 components are about having a control environment, understand the environment, internal environment effectively. Who are the stakeholders there in the internal environment? Understand about the board of directors, the top management, see the policies and procedures that are to be followed. Okay. Um, the attitude of the top management, the seriousness of the top management, see the value system of the employees in the organization, the role of internal audit, the role of audit committee. So these things all have to be understood thoroughly. Calculate the amount of risk, any loss that can happen, quantify that, find out the value of risk, then take up certain control activities to ensure that any kind of fraud does not happen. All information which is relevant for them to communicate with others, capture that information and communicate with others in the organization. And as things are implemented constantly, things have to be monitored and provide feedback for anything to be implemented. Feedback has to be provided. Earlier also I did mention that there are 3 different levels of management: the strategic level, the tactical level, and the operational level. What is the role each level of management plays is the strategic level is involved in the planning for the entire organization as a whole. So their planning involves what are the products and services the company will produce, and second area is where would they be selling these products and services. So those areas, how would they grow? Growth decisions. What are the steps about the strategies about growth? Will they be considered diversification? So it involves the entire organization. The planning at the strategic level involves the organization. See, it's the aggregate level of planning. It's not intricate planning. It's aggregate planning for the entire organization. But these things to materialize, these things to become possible, the middle level or the strategic level, the middle level or the tactical level, the management level also is involved in planning, tactical level planning, wherein they would be assigning the tasks, the responsibilities to the departments, divisions, resource allocation, etc. That kind of work is looked at by the tactical level management. Their planning involves these things in detail, intricate planning, scenario planning. Different possible situations are looked into, how things can be implemented, how resources are to be utilized, etc. Operational level is a level where the plans are implemented. So they are involved in implementation, but for them also a day-to-day planning is required. So day-to-day planning that has to be taken up. That is at the operational level. Um, Information flows for management. There should be effective channels. So whatever is the information that is required has to be captured. That has to be communicated. There should be flow of information so that people in the organization can be effectively carrying on with the activities. They can implement their tasks, etc. So information should be provided regularly to management so that they can monitor performance with respect to efficiency, effectiveness, and then economy and quality. Managers need both internal and external information. So all that has to be captured and then that has to be provided. What are the characteristics of information? This is not a new topic which you are learning now. There are there's an acronym given here about what are the characteristics of good information, that is given in the form of accurate. You have studied this in MA, you have studied this in PM also. So right now, so I'm not explaining that. This is very general. Not that this is the first time you're looking into that. You know about what are the characteristics of good information. Okay. Information characteristics. What are the characteristics? The time period, timeliness, these things. the strategic, the operational. So time period. So the strategy level will be forecasting. For the operational, they are involved in implementation. For them, it is historic. Timeliness, the strategic level, um, it's delayed. The strategies are not immediately implemented. They are planning for the future, so it's delayed. It is implemented immediately. Likewise, everything we look at from the strategic level and from the operational level. Okay, fraud part of it and all, we can take it up in tomorrow's class. So, because if I start with fraud, we don't have so much time. So, the internal control system also looks into identifying if there is any kind of fraudulent behavior or fraud happening. So, we need to differentiate between fraud and an error. Error is unintentional, fraud is intentional. Intentionally, if there someone is involved in some wrongdoing, that is called as fraud. So, if at all, if there is a risk of a fraud happening, what are this? What's the strategy, the management strategy in terms of preventing, detecting, and after detecting, what is the response of that? So we will take up this particular topic in tomorrow's class about fraud prevention, detection, and after detecting the fraud, what is the response in terms of dealing with the fraud? Okay. So after that, tomorrow's class we will be studying about auditing, internal audit, audit committee, what is risk management. As part of um, risk management, we have the same framework which we have just now learned for internal control. Another framework, it's an elaborate framework in terms of risk management. We call that as ERM. Tomorrow's class, see the different types of risks that are present. So risk management things we will be studying. Any doubts? Any doubts, students? Naveen Richard, what's the problem? Naveen Richard? Naveen, did you join? J. Naveen Richard. There's some problem with your system? Every 10 minutes you want to log into the Zoom account and join the class. In a day, how many times have I to admit you into the classroom? Any doubts, students? In that case, we'll wind up the session here. We'll continue tomorrow.